and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me as always is Snehisha. And this is the show where we get you all the buzzers in trade, the stocks that are in focus either on the back of news flow or on the back of technical charts. But first up, let's take stock of how the market is really shaping up. Well, we were seeing a very good gains coming in the market, but after that came in a decline, that a sell on rise, and then we're just managing to recover from the day's lows. In fact, we are currently recovering from the day's lowest point on Nifty and Nifty Bank both.
Yeah, looking good for the market right now, at least given how we are recovering from the day's low. Like Ankita mentioned, 0.3% uptick coming in on Nifty, but still much lower from the day's highest point. But once again, we're back above the 24,400 mark on the Nifty. For Sensex, also a 0.5% gain coming in, looking good, holding above the 80,600, now close to 700 mark on the Sensex as well. Let's pull up Nifty Bank because we've seen some major recovery coming in from the day's lowest point on Nifty Bank as well, and 0.3% uptick is what we're seeing. Still finding its footing in today's market, but above 55,200 is where Nifty Bank is at the moment. Things don't look so chirpy on the broader end of the market because Nifty mid-cap was out underperforming the street largely today. A 0.4% cut coming in on Nifty mid-cap. However, small cap earlier in the day was not doing so bad, and right now seems to be in tandem with the benchmarks, and 0.3% uptick coming in on the small cap. So it's really largely the broader end of the market, the mid-cap space rather, that is sinking away in today's trading session. From the Nifty 50 pack, you have Adani Ports, good reaction coming into its numbers. Bajaj Finance, Indus Bank, Maruti Suzuki, Zomato, that's Eternal now, Bajaj Finserv, Tata Motors, all doing pretty well. On the flip side, JSW Steel in pressure, and we'll tell you exactly why. Eicher, Nestle, Bajaj Auto, HDFC Life, Hero Motor, NTPC, all of them are the Nifty 50 laggards in today's trading session. Lastly, in terms of what sectors are up to, IT is your biggest gainer today, followed by media, bank and auto and PSU bank. On the flip side, biggest loser today, pharma index about 0.6% lower, followed by realty, metal, FMCG, energy somewhere around the flat line. But that's what the market construct is shaping up to be right now. We look to be on the path to recovery, but let's see, a couple of hours left of trade. Let's see what happens.
Alright, let's get going with all the buzzers in trade then. So for that, on the technicals, we are now joined by Vikas Jain, who's the head of research, Reliance Securities, and from the research team, we're joined by Gaurav and Rabinder. Hi, good afternoon to all three of you. Thank you so much for joining us, and let's get started with all the buzzers in trade today. The first up is the top Nifty gainer, that is Adani Ports. That is up in a way 5% in trade after it reported the 50% jump in its March quarter net profit and issued a higher year-on-year revenue growth forecast for the current fiscal, citing a strong growth in the port volumes and robust rise in the logistics business. Now, the net profit came in at 3,025 crores in the January to March quarter of April 2024 to March 2025 fiscal year, compared to 2,015 crore in the same period a year back. Now, as far as the brokerages are concerned, they are also very bullish. Nuvama is maintaining a buy call with a target price of 1,810 rupees. They feel if there is an overall growth coming in, strong guidance bodes well, and the focus is on the all-round growth. They expect the revenue, EBITDA and PAT CAGR to be 19%, 14% and 16% respectively in FY25 to FY28. And also the Adani Ports continues to scout for opportunities in ports, marine businesses globally that are subject to its criteria of geographical importance, of course, and that augurs very well for the company. Also, Motilal Oswal is also maintaining a buy call with a target price of 1,550 rupees per share, an upside of 27% from the Wednesday's closing price. And also the stock got a big fillip when Prime Minister Narendra Modi has officially opened the Wisdom International Seaport in Kerala, which is developed by Adani Ports. On the back of these two news flows, Adani Ports is in focus today.
Okay, Adani Ports looking good in today's trading session, top Nifty gainer. We'll come to you now. Vikas, tell us about Concord. That's the stock that you've picked out for us. If you pull up any charts in the recent history for the stock, it's a shade of red coming in. Last 1 year, the stock was lower by 35%. Tell us, do you believe on the charts if the stock is consolidated enough and now it merits a relook at it on the upper side? And what are the next levels you're spotting on the charts?
If you look at Container Corporation, the stock witnessed some amount of sell-off. But overall, the PSU basket is being gaining momentum, and we believe with the Adani Ports are above. The Container Corporation should also, the results should be pretty strong. The stock is making higher bottoms on the weekly charts, so the stock is being poised for a strong amount of upmove. No doubt it made some amount of attempt to cross those 725, 730 odd levels, then again witnessed and back near to the support zone. So the stock is near to the support zone. Risk reward ratio remains favorable for a longer term breakout. So we believe could head high further near to 745, 750, the first band of resistance area, which is the 100-day average. If that is being crossed, then 780, 85 could be possible.
Okay, so that's the take coming in on Concord, key levels to watch out for. Let's move on from that. Ankita spoke about Nifty's top gainer. Let's now throw some light on Nifty's top loser today, and that's JSW Steel. The Supreme Court today has rejected JSW Steel's resolution plan for Bhushan Power and Steel and directed for its liquidation as well. The Apex Court has said that JSW Steel's committee of creditors, a plan for Bhushan Power, was illegal and should not have been accepted by the COC in the first place. JSW Steel's ownership in BPCL is BPSL, pardon me, is 83.3% with effect from October 1st, 2021. Remember, JSW Steel had emerged as the successful resolution applicant with its 19,700 crore bid for Bhushan Power and Steel. Earlier this year, the Delhi High Court had set aside the money laundering proceedings against BPSL. Trouble has been brewing for BPSL, but today was the final blow delivered by the Supreme Court, where they have announced they've directed for the liquidation of BPSL, and on the back of that, JSW Steel, Nifty's top loser today, 6% cut coming in on that stock.
All right, the top Nifty loser, JSW Steel, trading with cuts of 6%. But coming to you now, Rabinder, Moil is the name that you picked out for us. Another earnings candidate, good set of results coming in. Tell us, what does the report card look like?
Whereas Moil is in focus, where company has announced its Q4 number, and the company reported a revenue at rupees 433 crore, which was up by 4% year-on-year basis, and net profit, company reported net profit at 116 crore, which was up by approx 27% year-on-year basis. If we talk about margin, the company reported a margin at 32.2%, which was up by 135 basis point year-on-year. Apart from earning, company has also cut prices of different grade of manganese ore and other products, and there are also some brokerage note coming in where Antique has maintained their buy rating and revised target price to 385 from 381. This is that the manganese ore demand in India is expected to grow at 1.4 times the current level of 8 MTPA to 11 MTPA by 2030, and FY 2025 witnessed the best ever production sales volume. This is the higher capex to deliver high volume. So back on the strong Q4 number and buy rating from brokerages, stock is up 7.5%.
Okay, so that's the reason the stock is in focus, doing pretty well. Good set of quarter four numbers, stock up 7% as we speak. Gaurav, coming to you, all eyes are going to be on SBI tomorrow. A nifty banking major coming out with its numbers. Tell us what we can expect and what the street is penciling in when it comes to SBI's quarter four numbers.
Well, yes, when it comes to SBI, the largest lender of India, let's not forget that the loan book growth is likely to remain as high as 12 to 13%, and as a result, when we talk about deposit growth, we may see a number somewhere in the range of 10%. When we look at the profitability and its impact, we may see net interest income increasing in the range of around 3 to 4% on a year-on-year basis, because in this quarter we may see some cost of fund pressure, and that is the reason why when we talk about PPOP also, we may see a decline of around 8% on a year-on-year basis, because the other fee income is likely to stay a little soft in this quarter. When we talk about provisions, now the street is not expecting any kind of uptick in the credit cost, or in terms of asset quality they are not expecting any kind of deterioration, but because the provisions are likely to go up on a year-on-year basis, we may see a decline in profitability on a year-on-year basis in the range of around 14%. But a key thing to watch out for is the net interest margins, because now the street is expecting net interest margin to remain somewhere in the range of what we have seen in the last quarter. But any kind of commentary is a key thing to watch out for from management. Any kind of commentary on the equity raise as well, because let's not forget that SBI has said that they will be discussing some points on equity fundraise via QIP. So that is something to be watched out for, but definitely a good quarter is what we're expecting from SBI in this Q4 FY25.
All right, so that's what we are expecting from big bank SBI. But coming to the big boy Adani Enterprises, which has reported its quarter four results. So besides Adani Ports, Adani Enterprises was also doing very well in trade. It has come off those highs since the day's high, but nonetheless it is up 0.5%. It gained almost 2% in trade today after it reported a consolidated net profit that spiked 753% to 3,844 crores in quarter four of FY25. The revenue from operations, however, declined 7.5% to 26,965 crores in quarter four. Also, the EBITDA for the quarter stood at 4,346 crores, which is up 19% on a year-on-year basis. Also, as far as the Adani Airports are concerned, they handle a traffic of 23.1 million passengers, which is up 3% on a year-on-year basis, and the cargo also stood at 2 lakh metric tons. So on the back of strong set of results coming in for Adani Enterprises also, the stock was up 2%, but now it's given up those gains, is up 0.5% as of now.
Okay, Adani Enterprises up 0.5%, still adding some fillip to the Nifty today. Because coming to you, Voltas is the stock that you've picked out for us. Now today the stock is lagging away. Last 6 months also, in the 6 months gone by, the stock has seen a 27% cut. YTD also 33% lower. In fact, any chart you pull up has not looked very encouraging for Voltas. A couple of analysts we've interacted with are also not very upbeat about the stock. On the charts, tell us, what are you spotting for Voltas? Are you now seeing some optimism on the charts, given the kind of correction that we've seen in the near as well as the distant past?
Look at this stock was one of the strongest performers of calendar year 2024, one of the largest best mid caps. Since then, we have witnessed good amount of corrective action. The stock has witnessed a good strong corrective action. It tested the lows of near to 1130, 1140 into the February 2025. Had a strong reversal near to those 1340, 1350. And now the last month current action or some corrective action seems to poised for some amount of support area. It has multi-month supports near to 1130 to 1140 odd levels, which is the convergence of the 34 and the 50-month 5-month average. So risk reward ratio is favorable with the summer strong summers going through and with various news flow coming through in terms of the summer demand. We believe the stock is poised for a strong amount of move. Technical charts on the weekly basis seeing some amount of reversal, been oversold. So we believe the stock can move higher further near to 1240, 1280 on an immediate basis. And if that is being crossed through, then we could witness a strong amount of breakout near to 1400 levels.
Alright, so that's Voltas on the charts. But coming to you, Ravinder, Godric Properties, that's another earnings candidate. Tell us what does the earning look like for Godric Properties?
Well, as Godric Properties is in focus, our company has announced its Q4 number, and the company reported a revenue at rupees 2,122 crore, which was up by approx 50% year-on-year basis. But company's net profit down by 19% year-on-year basis at rupees 382 crore. If we talk about margin, then margin also saw a decline of 350 or approx 350 basis point year-on-year basis from 8.6% to 5.2%. And the company says that the NCR, MMR and Bangalore region contributed to 10,523 crore, 8,034 crore and 5,089 crore respectively to the booking value in FY25. And company launched 34 new projects and phases during the financial years across 7 cities. And there are also management commentary coming in when the management says that in FY26 company has a plan to grow residential booking to over rupees 32,500 crore through the launch of a large number of existing new projects combined with strong substance sales. And this is the first quarter in which Godric Property has crossed rupees 10,000 crore in booking value, and also the 7th consecutive quarter in which GPL has crossed more than 5,000 crore to the booking value. Company has for FY26 the guidance lower than FY25, and the Godric Property FY26 deliver guidance to 10 m square feet meter from 15 million square feet meter in FY25.
So that's the take coming in on that stock. That's Godric Properties. That's what the earnings fine print looks like. Because you've also picked out Godric Properties on the charts for us. Tell us what are you making of this stock on the charts? Last 3 months the stock is low by almost 6.5%. What's the next key level to watch out for when it comes to Godric Properties?
Godric Properties is one of the most promising stocks in the real estate space, because if you look at the structure remains pretty positive. It has made a double bottom near to those 1930, 1950 levels. The results were less largely out in the last 1 hour of trade, and we have witnessed good amount of price action. So positive price action along with volume crossover remains a prevalent trend. On an immediate basis, we expect the stock to cash near to 2350, 2380 odd levels, and if that is being surpassed, then it could test it further up and extended near to 2600. The stock has also witnessed strong amount of traction, and over the real estate space, Godric Properties remains a preferred pick on the long side.
Alright, so that's Godric Properties on the charts as well. But coming to you, Gaurav, you picked out HAL for us. Tell us what's the news flow here?
Yes, HAL is in focus, and there is actually a positive news flow for the stock. Now, HAL's advanced light helicopter Dhruv Army and Air Force versions are cleared for operation based on the defect investigation which was ongoing, and this is based on the committee recommendations. Now, it is a time-bound plan for the resumption of the operations has been worked out with the users. And let's not forget that when we look at the time and the time frame, and if we go back in that, the armed forces had temporarily grounded all their 330 ALH helicopters following the January 5 crash which happened, which was actually an unfortunate event, but now it is back in action, and as a result, when we look at this defense stock, we are already seeing an uptake. Also not forget that in this year itself, the stock has given more than 7% return. So definitely on the back of the positive news flow, watching out on the HAL today.
Okay, so that's the reason HAL is in focus in today's trading session. Ankita, RailTel, big buzzer in today's trade?
Yes, absolutely. RailTel is a small cap. That's the top small cap gainer. In fact, that's buzzing up 12% in trade today. And that is on the back of course, its quarter 4 numbers after its revenue and net profit hit multi-quarter high levels in the March quarter. Revenue for the PSU increased by 57%. From the same quarter last year to 1,308 crores. The EBITDA for the quarter also increased by 54% on a year-on-year basis to 179 crores. However, the margin saw a marginal contraction from last year to 13.7% from an earlier 14%. Now, this is due to an 86% escalation in the expenses on the project from the same quarter last year. Now, the net profit for the period also grew by 46% on a year-on-year basis to 113 crore rupees. On the back of that strong stellar set of results that RailTel has posted, the stock is up in a way, has come off the highs of 12%, but nonetheless it's up in a way 7.3%.
Okay, that's the reason RailTel is in focus, and a good set of numbers. The stock also doing pretty well. Let's move on, and because if we keep it going with this a group of stocks, Titagarh Railways is the stock that you've picked out for us. Tell us what are the levels that you are spotting for this one, because if I take a look at Titagarh Rail's charts, last 6 months itself, it's been a massive cut of 36%, 3 months also lower by almost 22%. Tell us what's the outlook going ahead.
Look at on the railway stocks, Titagarh Railway stock was one of the strong performers of 2024. Since the entry into the F&O infusion, the stock has witnessed a strong amount of unwinding, and it is declining from the highs of around 1020, 1030 odd levels. But it has made formidable support area near to 650, 680 odd levels and witnessed strong rebound. Recently, it made a high near to around 830, 850, and again it declined from the highs, but it has made a higher bottom structure on the daily and the weekly charts. So we believe the stock is poised for a higher breakout, and with the rail infrastructure sector whole domain up through Titagarh Railways, there's a strong amount of open interest addition has also been witnessed over the past few days. So we believe the stock could move higher and again retest the higher band of near to 830, 850, which is the first probable target. And if that is being crossed through, then we will witness a strong move near to 880 odd levels. So we remain positive.
All right, moving on from Titagarh on the charts to JSW Infra on the back of its numbers. Rapendra, take us through the numbers.
Infra is in focus. The company has announced its Q4 number, and the company reported a revenue at rupees 1283 crore, which was up by 17% year-on-year basis. And if we talk about PAT, then PAT also company reported a PAT at rupees 516 crore, which was up by approx 57% year-on-year basis, and the company reported EBITDA at rupees 730 crore, which was up by 7% year-on-year basis, and the total cargo handled at 170 metric ton, which was up by 9% year-on-year basis, and third-party cargo volume grew by 34%. And there are also some brokerages not coming in where Kotak Security has downgraded the stock to sell from reduce with target price of rupees 294, and they say that the JSW Infra reported a tepid and inline Q4 print with comparable port volumes flat on 1-2 year basis, and they have increased EBITDA estimate by 2 to 4% on higher logistics spend, though they lower EPS estimate by 1% on account of quick uptick in spending on logistic capex. And Jefferies has maintained their buy rating with target price of rupees 355. So JSW Q4 number was in line with street expectation, and brokerages has also cut their rating. So back of this stock is trading around flat level.
Okay, absolutely flat is JSW Infra. Now let's move on to you, because you picked out Cyient for us on the charts. Last 6 months, it's again a cut of 35% coming in. Year to date also not much happening. Tell us, I seem to be spotting a pattern. You've picked out stocks that have not done well in the past. Tell us if the outlook for this one also is positive going ahead, or now still some more room for consolidation is what we're seeing.
Cyient is one of the turnaround stocks to look at, because if you look at post the results, the stock had a large sell-off. But since then the result is the stock is continuously witnessing strong amount of rebound from the lower part of the range. The IT sector broader basis looks around on the recovery path. Cyient Limited valuations have been pretty attractive, near to 12.5-13 times 1 year forward earnings, so which gives a compelling from the mid-cap basket. And also the stock has also completed its 61.8% retracement for the entire move from the lows of around near to 300 to 2550 in a high. So it has strong support near to 1075, 1080 odd level. So risk reward ratio is favorable. Technical chart suggests a strong amount of rebound when IT sector trades so strength. So SAN could be one of the best outperformers into the mid cap space. So that's why I repeat SAN Limited. The stock can move higher further near to 1380 to 1450 levels over the next few weeks.
Okay, so that's the outlook coming in on Science Limited. Let's move from that and talk about Indus Towers now. Shares of this stock have fallen as much as 7% today in reaction. A slight recovery, 6% lower, but this is on the back of its reaction to its fourth quarter results and also, more importantly, a delay in the company's proposal to enhance shareholder value. The stock is among the top losers in the Nifty 500 today. Indus Towers did not announce the shareholder value enhancement proposals that the board also planned on considering along with the quarterly financials. Remember, the tower company had informed the exchanges last week that the board plans on enhancing shareholder value through either a share buyback, bonus issue, or shares or debentures on dividends. On the earnings front, Indus Towers reported a 2.4% growth in its revenue on a sequential basis, while on a year-on-year basis, the top line grew by 7.4%. Reported margins for the quarter were also lower sequentially due to reversal of provisional doubtful debts from Vodafone Idea. So a mixed set of numbers coming in from Indus Towers, but on the flip side, they have not gone ahead and announced any share buyback or bonus issue, and that is what has upset the street to an extent, to such a big extent today. The stock is lower by 6% as we speak.
All right, moving on from Indus Towers, coming to you, Vikas. You've picked out Tata Chemicals for us. Now tell us, what do you see on the charts for Tata Chemicals? Because if I pull up the charts for Tata Chemicals, in the last 6 months, it has declined over 25%. So from here on, do you see further downside to it, or do you see a re-rating coming in on this chemical name?
Some amount of re-rating can be expected because the stock is being near to the monthly charts crossover, and we have witnessed a good amount of sell-off. No doubt the stock made some amount of bottom-up formation, and it's seen the view candidates that is a double bottom formation near to 780 odd levels. One of its subsidiary IPO is at one of its related parts of the group company is expected to come out with an IPO, so some amount of re-rating would also happen in terms of Tata Chemicals. The stock is holding its short-term and medium-term averages of 20 days and 50 days. So we believe the stock could see some amount of strong potential near to higher of 920, 930 odd levels on the higher side, which is the 100-day average. Even the RSI and the relative strength indicators that the stock is poised for a strong move.
Okay, that's a technical take coming in on Tata Chemicals. Let's move on from that. Gaurav, Exide is the stock that you've picked out for us, another earnings candidate. Tell us what the fine print looks like, because the stock is doing pretty okay today.
Well, yes, when we talk about Exide Industries, the Q4 numbers is what we have got, and the revenue actually grew almost by 4% on a year-on-year basis, which was actually in line. But when we talk about EBITDA, there we saw a dip of around 10% on a year-on-year basis. Now, this was because of the increase in input prices according to the company, specifically about the antimony, which contributes around 2 to 3% of the battery production. Now, antimony prices have surged over 4 times, let's not forget that, since Jan 2024, and that is the reason why we saw drop in EBITDA, and as a result, when we talk about profitability, there also we saw a little bit of drop. But when we talk about the brokerages, they are being a little optimistic about this. Nuvama, although they have maintained their hold rating and a target price of 370 rupees, what they are saying is that the stable growth is likely to come in the core business segment. They are building around 7% growth in the revenue side, and at the same time, what they are saying is that the estimated lithium battery demand is going to be somewhere in the range of 150 to 160 gigawatt, which is again going to be a positive because company has recently added players like Hyundai and Kia. So definitely a little positive note is coming up from the brokerage, and as a result, we are seeing some uptick in this stock as well. So definitely watching on this stock on the back of the positive note and the good results.
All right, moving on from that to Vikas, coming to you, Aarti Industries, what you've picked out for us on the charts. Aarti Industries has picked up a little pace in the last 1 month, trading up 7% odd. From here on, where do you see the stock headed?
I think that Adani Industries is one of the largest gainers into the April series with more than 23-25% gains. If you look at the structure, the stock made various attempts to cross its 100-day average, but again failed to so and again witnessed strong amount of reversal. Now the stock is consistently trading higher above the 100-day averages of around 415, 417. So with strong price volume action, strong price participation, we believe the stock is headed further. So on a relative basis also, the stock has witnessed good amount of uptick. in terms of the overall chemical space. So Aarti Industries is poised for a strong move near to 485 to 500 levels, which is the 200-day average. So we believe the stock could continue its dream run into the May series in line with the April series price movement.
Okay, Vikas, thanks for that take coming in on Aarti Industries. On that note, viewers, time for a short breather on this edition of Market Fatafat. We'll slip into a short break, but when we return, we'll keep it going with all the big buzzers in today's trade. So you stay tuned and we'll be back.
If you like this video, then like, share and subscribe to ET Now.